Hi everyone, welcome to another weekly Forex forecast for the week ending September 18th, 2020. Today we're going to talk about the EURUSD, the Pound USD, the New Zealand dollar versus the US dollar, as well as the pound versus the New Zealand dollar, and we're going to wrap things up with gold or XAUUSD. We have some nice trades setting up, including the EURUSD and also gold, which could be breaking out of a multi-week consolidation pattern. So we're going to discuss all of that and more in today's forecast. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and this is one that has been consolidating now for several weeks. I traded it back here when it was breaking out of this consolidation pattern and rode it up here until we reached 119.60 and sold off from that on this candle through this area. Now I did buy it again through here, and I also sold it up here, and I made a little bit on both of those trades. But to me, the real trade here is going to come when we break out of this sideways movement. So given that the uptrend here is still intact, I'm really only looking for buying opportunities when we do break out of that consolidation. Now, last week I entered long here with a small starter position, and I'm not going to add to this until we get a close above 119.60. The reason I like looking for longs here is if we look at the monthly time frame, you can see where the EURUSD is still holding above that multi-year wedge pattern. So notice how we had this breakout back here, and ever since we've just kind of been consolidating above this area, which could be as low as 115. So as long as this is intact and the euro is staying above this pattern, I'm only looking for longs here with an eventual target of 125. So moving back to the daily time frame, a close above that 119.60 area could take us up to 120.90, whereas a rotation lower down into the 117 area with a break there could take us all the way back to perhaps 116 or even that 115 area that we just looked at. But as I said, as long as we're making higher lows and also higher highs, I like the idea of looking for longs here. Any shorts are counter trend, and they're not especially favorable in my opinion. So if you saw my forecast from a couple of weeks ago, I mentioned how the pound could be in trouble if it broke below this short-term trend line. And as you can see, we got to close below that last Monday, and sure enough sold off to that 129.80 area, which was the target. Now, I also said last week to members that if we broke below this longer March trend line, that we could see additional weakness from the pound. So going forward this week, I would keep an eye on the 129.30 area, which could act as resistance. Now, support, I wouldn't really look at this 128 area. It could be acting as support today, but if we do get a rotation lower, 126.40 is going to be the area to keep an eye on. Notice back here we had two highs through this area. It got choppy, but then look at how 126.40 served as resistance again through here. Alternatively, if the pound closes back above that 129.80 area, so if we get a move higher and we close above this region, that would indicate that this down here was a false break, and it would also send the pound higher, perhaps back to 132.60. But as of right now, buyers have to get through the 129.30 area for that to happen. So for now, 129.30 is resistance, and 128 is going to be minor support, with a break below that taking on 126.40. The New Zealand dollar is an interesting pair to look at, and at first glance, it looks like we're forming this rising wedge, which could hint at a pullback. So if we get a close below this area right around 66.40, that could expose some of these lower levels like 65 and perhaps even 63.80. However, something I mentioned to members last week is if we look at the weekly time frame, it's in a similar situation as the EURUSD, where we have this break of a multi-year wedge pattern after this false break back in March. So you can see where we bounced from the 65 handle, and as of right now, if we do get a rotation lower, this is something to keep an eye on. Notice how we have a left shoulder over here, we have what could be a head, and a potential right shoulder. Now you could say that this was the right shoulder back here. However, if that rising wedge does break down all right, we could see a rotation back into 65 or perhaps a little bit lower to form that right shoulder before we move even higher. Now, if we do start to see the New Zealand dollar take out some of these recent highs just above the 67 handle, that would negate the idea that it's headed lower, and it would also potentially expose the 169.40 region. Notice how we have a lot of highs back here, so that 69.40 area could attract some sellers. But all in all, as long as the pair is above this level, that's going to serve as support, and resistance is going to come in just below the 69 handle. If we do break above that and start to take on 69.40 and break above that, it would negate this pattern. So this is not something I'm looking to short right now. If we do get a close below this level through here, I'll reevaluate that, and I may take a short down to 65, but that's probably about it. As of right now, things are looking pretty bullish for the New Zealand dollar. The same goes for the EURUSD. I mentioned this channel on the pound versus the New Zealand dollar several weeks ago, and at the time we were testing the bottom of this channel, so right around here, and I said that a breakdown of this channel could expose the 182.70 area. Notice how we have several lows back here. However, we didn't break down and instead got a nice bounce from that level. However, this right here just confirmed that this ascending channel is significant. Now, look at where we are now. We're right back to testing that channel support. And this to me signals that a breakdown is imminent. So if we do get a close below the 19100 area, that could expose 182.70. Now we're looking at the weekly time frame, so whether you need a weekly close below this or a daily is up to you. However, I will say that a weekly close is going to be a bit more convincing than a daily. That doesn't mean you need to wait for it. However, even if we get a weekly close below the 19100 area, I wouldn't be surprised at all to see a retest of this area as new resistance. But right now we are just waiting for a breakdown of this channel. Just keep in mind that this area through here is still serving as support. So if you're getting short through here, we could see another slight bounce higher before we get that eventual breakdown. So just keep that in mind. But given the longer term downtrend that's been in play here, and also this ascending channel, it does look like the GBPNZD is getting ready to rotate lower if it can get below the 19100 area. Next up, we have gold, or XAUUSD in this case. And as you can see, 1900 is holding as support. Now at the same time, last week I said that we needed the first higher high in this series in order for gold to break out. Notice how ever since we tested 2075, we've carved lower highs along the way. And even this right here is a lower high. Now we also have this trend line that extends from 2075 that if gold closes above this trend line, that could be an indication that we're breaking out of this pattern and going back to test 2015. And if that happens, that would also be the first higher high in this series. Now, given the uptrend here, I'm only looking for buying opportunities. And in fact, I'm still playing this via the gold miners. So I bought several gold miners back in April, and I still have those positions today. I haven't sold any, and I don't intend to for the next several months or even years. But for XAUUSD, it's all going to come down to this consolidation and whether or not buyers can close the pair above this wedge pattern. If they can, again, that could expose 2015 with a close above that taking on 2075. Now, if we do get a daily close below that $1,900 area, that could signal weakness, but just like I've said before, it could only take us down here to some of these recent highs, maybe around $1,800, because all in all, the uptrend has been intact for several years, and I don't see that changing anytime soon. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.